Okay, so when it comes to mortgage lending, we had one story already in the show about the devilish details. This one is also on a purchase transaction where, you know, we you know how much we love our rock solid pre-approval program because it flushes out the details before you're on the clock of a purchase contract. And so this particular couple called us up and said, yeah, we want to get rock solid pre-approved, and we took their application, got their credit, and then like within a couple days before they got all of their documentation to us, they called and said, well, we have an accepted offer. They kind of got excited and jumped the gun, or maybe it was just the perfect house that came up and they couldn't resist.
Sure.
And I guess that's understandable. But in this particular case, one of the borrowers had switched from a salary position to a commission position. And, of course, in the application interview process that we do human being to human being, we do it over the phone and 9 times out of 10. But we say, so when did you start getting that commission income? 18 months ago. Well, okay, the Fannie Mae Freddie Mac rule is 2 years. But, 18 months, putting 25% down. Yeah, let's give it a try. Well, it turns out then what you have to do when you're verifying commission or overtime is you have to get a verification of employment from the employer, because you can't typically tell just from the pay stubs, or you definitely cannot tell from the W-2 when did the commission start, right? So there's some back and forth. We end up not getting the verification of employment that spells that out until really late in the game. And it turns out it's only been a year, not 18 months. So that's too much of an exception for Fannie Mae and Freddie Mac. Now we're in a scramble because in FHA, which again, it's good to deal with a lender that has more than one tool in their toolkit, FHA's requirement is also 2 years, but they have it printed right in their rule book that we'll consider as little as 1 year if there are substantial compensating factors. Well, the typical down payment on an FHA loan is 3.5%. These people are putting 25% down. So we're thinking that is a very substantial compensating factor.
Sure.
To say, well, maybe we can swing with this, only 1 year of commission history. So we're now in the process of switching gears here, but way late in the game. And, of course, it's a problem, right? Because people are expecting it to close, and now we got to have this delay, and it's just not good. So I just can't emphasize enough. There are some people that are so extremely boring, it's awesome from a mortgage lender standpoint, right? Yep, I'm a salaried employee. I have been at my job for 10 years. Nothing has changed. I'm stable as the Rock of Gibraltar. The money has been in my bank account forever that I'm going to use for the down payment. Awesome. Maybe that's the one guy or gal or couple that doesn't really need a rock solid pre-approval. But it seems like a lot of people always have at least one thing that's a little goofy, a gift or whatever. Oh, you know what? I didn't tell you. I'm going to take the money out of my business account for the down payment. It's like, that's, there are all kinds of little things that can be trip-ups. We want to get those things out on the table, documented, and decided ahead of time. That's what the rock solid pre-approval is all about, rather than doing it under the time crunch of deadlines that we have in this particular case.